From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Juliette Sarli. On this day where we saw Donald Trump become the 47th president of the United States, a really interesting session in markets. Remember, Wall Street was closed for Martin Luther King Day, but we did have the so-called Trump bump on our market right on the open, rising by some 1.1%. But you'll note that dip that started to come through around lunchtime, and that's as we started to hear some chatter about what Trump might be doing, particularly in terms of these universal tariffs that he flagged. He pulled the US out of a global tax deal as well, and of course made a number of executive appointments and announcements, including, of course, the executive order on the energy space. But we have rallied to finish higher by around 0.6%. Looking at the ASX 200, it is higher by some 0.6% as well, I believe. Yes, up 50 points, 8,397. A new 20-day high, in fact, for the ASX 200, and certainly helped out a lot today by what we saw with the financial stocks. But of course, Trump's back. We touched about the Trump bump there as well. And then, of course, it's earnings bonanza as well. We've got Netflix, we've got the likes of United Airlines, Charles Schwab, 3M company, all coming through tonight, and we had a raft of quarterly updates here as well today, including from BHP, Hub24, Liontown Resources, Northern Star and Yancoal. Let's have a quick look at some of the reaction in the market, particularly to BHP's quarterly. It's up 0.5% on the close. Rio also firmer by around 0.4%. And don't forget, of course, we've seen a pickup in iron ore, helping out the likes of Fortescue and South32. The banks, as I mentioned, all very solid. Everybody that keeps telling us to get out of the bank seems to be proved wrong. Many days in a row, we've got CBA up 0.6%, $156.12. And I will note as well, the utility sector down by 1.5%. Looking at some of the corporate stories, Liontown was one of the front runners, up at more than 13%. It saw output triple in the December quarter. We were also looking at Santos, now shares down by about 2%. Its partner Carnarvon reporting a delay in an oil and gas project valued at over $2 billion. Hub24, I mentioned, was a front runner. This after the wealth platform reported record quarterly platform net inflows of $5.5 billion. And Wesfarmers an interesting one. It's trying to wind down its loss-making Catch business, apparently losing out to the likes of Temu and Shein. Catch will cease trading as a standalone business in the fourth quarter, with its e-commerce fulfillment centres to be transferred to the Kmart Group. And let's get now to the COB. We're just having a quick look at some of the other retail stocks there as well. But welcome to the COB, Martin Crabb from Shaw & Partners. It has been a while, Martin Crabb. Welcome back.
It's been over a month. Yeah, I've missed you guys.
Yes, we missed you too. It's great to have you back. What did you think of the so-called Trump bump on the market?
Yeah, it was a bit of a nothing burger. I think we were all waiting for these 100 executive orders. We were waiting for universal tariffs against everyone, and then specifically against China. And I think, obviously in hindsight, that was never going to happen. But there's been a bit of activity, as you said. He seems to have signalled February the 1st as a day to introduce Canadian and Mexican tariffs. But I think the fact that he had a phone call with Xi Jinping, which was a great call last week, and he's planning to visit there. Maybe he's just holding off on the China stuff. So the futures, obviously, market was closed for Martin Luther King Day, but the futures were pointing to a pretty strong open. They sold off a little bit early in the morning, and then they've sort of rallied in the afternoon. Ditto the Chinese market. So the Chinese market was a bit softer early in our trading session. It seems to have picked up now. So it's a little bit of a sell the rumour, buy the fact, or buy the rumour, sell the fact in this case. Really not a lot to interpret from Donald Trump's first 24 hours.
I was at a really interesting briefing today speaking about what the Trump 2.0 presidency is going to look like. And one of the speakers mentioned the fact that perhaps markets are really judging that we're going to see what happened in the previous presidency with the US and China, but maybe there's actually going to be an upside, whereas this relationship could be really positive, and therefore you could see some great activity happening across both economies.
Yeah, and it's worth thinking, Juliet, what's priced into the market. So, everyone's been writing their 2025 outlooks, and, I've been to a number of conferences and listened to a lot of fund managers over the break, opine about what Donald Trump's going to do. And most people are very, very negative on the US-China relation, just because during his election campaign, he just bashed China every chance he got. And obviously he said a lot of things about tariffs and trade wars, etc. So everyone's just put that into their models. They've said, the China-US thing's going to be horrible. Europe's got caught in the crossfire. China's really going to struggle. We're all underweight China. We're all massively overweight the US. And they go, well, that's in the price. What's not in the price is more détente, is more about these guys sitting down and having a chat and saying, what's mutually beneficial here? How do we both get what we want without causing each other damage? And that's not in the price. So if there's any sort of détente between Xi Jinping and Donald Trump, the markets are going to read that quite positively. You're more likely to see it in things like the volatility index, right? So the measures of volatility are pricing in a lot of this kind of concern. So you'll see that start to come down, and you will see equities rally if that pans out.
All right, let's talk about some of the equities, and particularly today's movement. Now, Hub24 was one of the best performers. Shaw and Partners has liked this for a while.
Yeah, we don't cover the stock, but we have it in our portfolios, in our top 100 portfolios. It got put in the ASX 100 about 6-9 months ago. And look, this is a very long runway business. I wouldn't say it's the cheapest stock in the market, around $70. It's probably earning about $1 at the moment. So it's not the cheapest stock in the world, but it's just got a fantastically long runway. And if you think, Julie, about what's going on in the wealth management industry, it's just fragmenting all the time. It's like AMP have sold their planners, Perpetual's merged with Pendal, and now that's being acquired. You've then got, Insignia's being bid for by private equity. There's a lot of planners in Insignia. And as people leave these big houses, and it used to be the banks, now it's others, they go independent and they look at the platforms, and they tend to go with Netwealth and Hub, and to a lesser extent Praemium. They tend to go with these sort of new age guys. So Hub's got probably the best net promoter score in the industry, and yet it's only got 7 or 8% market share. So we just see the runway as continuing to grow. And what the market really liked was the run rate of their inflows just improved. So you had a chart there that showed they're up to about $1.5 billion a month of inflow, and that's above what people have in their model. So they're already 110 bill, but they're just going to continue to grow and continue to grow. So we really like this as something that's got a long runway. Yes, it's had a good performance, up 12% today. It was a little bit softer going into the quarterly, but just a really good bottom draw stock. It's just going to continue to grow market share. Let's
talk about BHP. Group copper production up 10%. I guess the broader picture kind of unchanged here, which is a good sign.
Yeah, look, they've pretty much continued their production guidance, or maintained their production guidance, with the exception of some weather-related events around their copper assets. And also, importantly, maintain their cost guidance, because one of the concerns everyone's had with miners is you've got softening demand out of China, commodity prices are holding up, but they're not exactly ripping away, but we've got all this cost pressure, whether it's fuel or the currency or labour, and the fact that they've stuck to their cost guidance. Like, costs aren't getting worse, they're maybe not getting better anytime soon, but we've passed the worst of the margin squeeze for the miners, and now we can look for a little bit of production growth. And obviously everyone's talking M&A. It's probably going to be a big year for M&A in mining. Some of the deals that are rumoured probably won't happen, but you'd have to say what we've seen a little bit of last year, we'll probably see a lot of this year.
All right. There's some interesting data you've got as well. We don't normally go into the housing market with you, but this is where I'm quite happy to be below average. Some quite hefty mortgages in New South Wales and nationally.
Yeah, so there's a mortgage broker called AFG that's listed on the ASX, and they're one of the bigger players in the industry, and they put out these really cool stats every quarter, and they tend to come out a little bit quicker than the ABS. So it's just a bit of a lead indicator of what we're seeing in the mortgage market. Now, Andrew was just interviewing an expert in residential real estate. So viewers that have been on for the last hour or so will have heard some really interesting insights. But what we're seeing is people are paying more for houses. So the average house that got purchased during the debt quarter was 1.25 million in New South Wales, and over $1 million nationally for the first time ever. And they're also taking out larger mortgages. So you're looking at like an 800k mortgage in in New South Wales, which is pretty incredible, right? So these numbers
Probably
were
for a
couple of years ago were only 500. So yeah, I mean, only 10% of the market's first home buyers, but people are paying up and they're putting down 60 to 65%. So the other thing out of that was just New South Wales, which has been the most expensive market and still continues to be. So the gap is closing. So there was a 35% premium on house prices in Sydney during COVID. It's now down to 20. So whether that's more people living outside of the expensive state of New South Wales, whether that's just Melbourne dragging it down, or whether that's Perth and Adelaide and Brisbane, with working from home and Zoom and all that sort of stuff, you can kind of work anywhere. So maybe people are just choosing cheaper locations to run their business. So Sydney not holding that premium as much anymore.
All right, Martin, great to have you back. We look forward to regular Tuesday catch-ups. Martin Crabb there, of course, from Shaw and Partners. All right, well, we had a special US edition of the call today, given the inauguration of Donald Trump. The stock of the day was Tesla. Ted Alexander from BML Funds and Jessica Amir from Moomoo joined Andrew.
I don't think those are good enough reasons to buy it, and it's been on such a big run, I can't look at it from a valuation perspective and say, hey, there's great upside here. So I'm looking at a very hot stock. You'd be doing a momentum play, and that's okay, but do you want too many of those in your portfolio? I'd be a bit cautious about touching Tesla here. However, if I'd been on a run with this stock for a couple of years and made a lot of money, or particularly the last year, and made a lot of money out of it, I might be tempted to roll the dice a bit more and keep it going.
With Musk and Trump's relationship, there's a couple key drivers of share price growth. So you're looking at long-term share price growth potentially being fast-tracked and getting more hot sauce. And that's because full self-driving, we know a couple of weeks back we heard from the incoming transportation government head. He said that they're basically going to make rules a little bit easier for full self-driving in the US.
All right, let's check out the market leaders on a positive day for the market. Liontown, we mentioned, rising, along with Hub24, both of those out with quarterly updates today. Zip also did well. A Yancoal came through with an update as well, and Neuron Pharmaceuticals up by about 5%. To the downside, Johns Lyng fell by more than 4%. Tabcorp also under pressure. Premier Investments, Ramsay Health and Origin Energy due to a broker downgrade. In the small end of town, Core Lithium probably rising on the back of what we saw with Liontown up by an impressive 17%. And in the small end of town, looking at some of the laggards, we mentioned Carnarvon and Santos, of course, there. So Carnarvon falling by some 22%. I also just did want to point out, which didn't come up on our screen for some reason, that Novonix shares fell quite sharply today as well, down something like 6%. CEO Chris Burns is stepping down, in fact, this week, ending a 4-year stint at Novonix. All right, let's have a look at what we are expecting tonight. It is WEF in Davos, day 2. Some CPI data out of Canada, but of course the main thing to note is the earnings results in the US. So markets will resume trade after the Martin Luther King Jr. holiday. Netflix, 3M, Capital One, Charles Schwab, DR Horton, KeyCorp, United Airlines among the companies reporting earnings tonight. And tomorrow we get CPI in New Zealand for the December quarter, also building activity for the September quarter. The Westpac leading index from December, and of course it's a very busy day again in terms of quarterly reports, and some of those will be Boss, Woodside and Paladin. A quick final check on where the market is. We are higher by 0.6% there on the CBO 200. The ASX 200 up by 0.6%, or almost 0.7% there, 55 points high, 8,402, so just getting nicely above that 8,400 level on the close. We mentioned Liontown Hub doing very well, the financial sector up by more than 1%, and 7 of the 11 sectors ending higher, but it was utilities on those broker downgrades dragging us down 1.5%. All right, that does it for today. We'll be back from 9:45 a.m. Eastern tomorrow. Enjoy your evening.